So let's jump into the Afghanistan Development Finance Panel. We had hoped to have Mr. Hamidzada from the World Bank today, who was going to kind of scene set for us the situation of Afghanistan's development finance. And as it's increasingly becoming apparent with the WTO accession that you now receive or will receive shortly, trade finance becomes a major part of that discussion as well. So we have on the platform today Jeffrey Constantz. He's the Managing Director for Asset Management at the Overseas Private Investment Corporation. He'll be talking about, no, you can stay there. We're gonna do a scene setter first. Don't get too anxious yet, Jeff. OPIC's future efforts in Afghanistan. OPIC, we usually have John Aldonis here, who's been a longtime supporter of the AACC, and John's on travel in Paraguay this week, but he sent his #1 guy to talk to us about OPIC's efforts, and we're really very proud of that. OPIC is really one of the best mechanisms for investment of 50 million or less, is that still basically the cap on it, into countries overseas that the U.S. does. So you're going to be very interested in Jeff's remarks. Kevin Pedone is from Clements Worldwide. He's going to be talking about reducing risk, both political risk, commercial risk, and so forth, in places like Afghanistan via the insurance model. Thirdly, Hajime Takeuchi has been a longtime supporter of our conference. He's coming from the Japanese Embassy. He's the representative from JICA, the Japan International Cooperation Agency, and he'll be talking about their recent efforts in Afghanistan and updating us on their investments that they're going on there, many of which could impact some of your strategies. And lastly, we're going to be hearing from Dr. Hashmat Seyar Amarkhail, who's the president and CEO of Afghan Rural Finance. We wanted to have an SME-type lender, but specifically somebody who's involved in rural and rural-based programs. Could be agriculture, could be smallholder-type programmings. So he's going to talk to us about their programming in Afghanistan as a model. And I think all of you as businessmen and women should be looking at their presentations of what can I learn from that to take back, but also is there a partnership opportunity with them that I want to talk to them about? Should I be looking at a similar business model maybe in my sector based on how they did their activities? So each of the panelists are going to have about 10 minutes, just as we've done on the previous panels. So let me begin quickly with the scene setter that the World Bank would have provided for you. First, World Bank Group is supporting the Afghan private sector development through about multiple different facilities, financing facilities and agencies. The World Bank itself, since April 2002, has committed over $3 billion for development and emergency reconstruction in Afghanistan. It has 5 budget support operations currently in Afghanistan. This support is comprising about $2.7 billion in grants, of which $436 million are no-interest loans known as credits. The bank has 15 active IDA projects, IDA is one of their facilities, that have invested in Afghan businesses. And the World Bank has provided advice to the government of Afghanistan, obviously, on the management of their funds. The bank's strategy is to implement elements of the most important national priority programs that have been identified by the Afghan people and by the Afghan elected government. They follow that MPP program very closely. Their greatest priorities right now are to build domestic sources of growth and jobs to replace the donor and the international assistance. So that's your area. They're looking to help you in your area in building a private sector-led economy. The IFC, the International Finance Corporation, is a subsidiary of the World Bank. It is the private sector arm of the World Bank. The IFC continues to work in Afghanistan with investment and advisory service partners. They've committed investment portfolios totaling about $80 million in 5 different companies, including commitments in finance, telecommunications, and the hospitality sector. IFC is now exploring opportunities across the manufacturing, financial markets, and the infrastructure sector as well. So IFC could be a potential partner for you and your businesses longer term. So you need to be sure to try to reach out to them or use AACC to reach out to them for you. MIGA. We had last year a presentation by MIGA. That's the Multilateral Investment Guarantee Agency of the World Bank. MIGA provides basically investment guarantee insurance to projects. It's got about $154 million in exposure in Afghanistan right now for telecommunications and agribusiness projects. The telecommunications project, it's called MTN, is also receiving financing from the IFC. And they have 2 agribusiness projects that are in dairy and in cashmere production. Thirdly is the Afghan Reconstruction Trust Fund, ARTF. Many of you I know this big elephant in the room called the ARTF. ARTF is a partnership between the donor community. USAID puts money into that. Other donors put money into it, as well as the bank. And with the government of Afghanistan, they hope to improve the effectiveness of the reconstruction effort. As of June 2015, just a few months ago, 34 donors have contributed over $8 billion, making ARTF the largest contributor to the Afghan direct budget. They both provide operating costs to run the government, help to finance the government, but they also fund and invest in development programs. ARTF support is again based on the NPP, the National Priority Program that the Afghan people have selected based on their elected leadership. They have more than $3.7 billion has been dispersed to the government to cover recurring costs such as civil servant salaries and other programs, but over $3.8 billion, this was a big number for me, $3.8 billion has been made available both for closed and for active investment projects directly. And as of June 2015, 21 projects are now active under ARTF with a net commitment value, this is investment commitment value, of $2.5 billion. Now let's hone in a little bit on the banking sector. I had a nice conversation last night with a couple of the bankers that have traveled here. The Afghan banking sector, according to the IMF, continues to be very weak. The ratings from the bank, what they call the CAMEL ratings, is less than 4 of the 7 banks that account for about 51% of all the banking assets. Lending to the private sector really dropped in the last 6 months or so by 7.3% from 2014. And a lot of the commercial banks have closed because their deposit and growth rates have stalled. A lot of that has been attributed to the growing insecurity. A lot of it is also restructuring based on the international assistance no longer driving the economy. Now we're really getting an Afghan-led economy developing. Key issues surrounding the banking sector continue to be the absence of a comprehensive legal structure, infrastructure, including credit information bureaus, limited institutional capacity of the banking system itself, and they attribute that to weak credit assessment capabilities and inadequate corporate governance and low capital strength. Also, there was a bank pitch that the World Bank pitched that they would like to see more financial inclusion in Afghan lending. Less than 10% of the adult population is currently holding a bank account, and 1.8 branches per 100,000 people in 2011 is really not very good when Pakistan is having about 8.5 branches per 100,000, and that's based on a 2014 report. So let's look now at Afghan private sector finance and investment. Afghanistan's investment rates dropped for the 3rd time in a row, according to the World Bank in its April 2015 report. The report has showing new firm registrations have dropped about 26%, and that has occurred across all the sectors pretty much evenly. But again, as the ambassador said this morning, we attribute more of that to the declining international assistance and now the stabilization and we hope growth of the Afghan economy. Our Afghan regional and international trade, the deficit has decreased in 2014 as the exports are continuing to show strong growth. That is exactly what the ambassador talked about this morning. Afghanistan is now moving forward on an import substitution, export-led growth platform. That is how all the other Central Asian republics have necessitated their growth, and we look forward to trying to figure out how we can help that. On the trade finance side, with Afghanistan's WTO accession, it's much more, Afghanistan is now very interested in trade financing capacity and utilization to help your firms to begin exporting, at least regionally, or even within the country itself. Much of that support will continue to come for the next probably 4 or 5 years from the multilateral development banks. The G20 leadership did commit over $6 billion to funding for increased trade facilities, of which a larger portion will be for Afghanistan. Unfortunately, the bank, as the ambassador talked about this morning, publishes every year a report that's called the Doing Business Report. We talked about this last year, and I don't want to focus on it too much. Afghanistan has gone backwards in this report. So who looks at this report? Anybody that's an investment manager at a bank, anybody that's thinking regionally about investments and strategies, big corporate business development people that are planning out where they're going to be looking for regional platforms, strategic marketing relationships, distribution plans, they're reading this report. And the report, unfortunately, is showing that Afghanistan, your starting a business ranking is now 34 out of 189, which is a good number, but now it's starting to go backwards. It had risen each year for many years. Dealing with construction permits, out of 189, Afghanistan is ranked 185. Getting electricity now, which used to be a declining and a rising quality number, is now declining, and now you're rated at about 156. Registering property is about 184 out of 189. Property drives commercial investment and personal investments in housing and real estate. Getting credit, you're getting better rankings, but over time it's starting to diminish now. Again, some of this could be attributed to the declining international assistance economy and now Afghanistan's own economy taking over. So we don't want to focus on it too much. Now, so what are we recommending? AACC has recommended over the last really year and a half two basic things that we'd like to see done in 2016 to help you and help the Afghan economy. We'd like to see a U.S.-Afghanistan bilateral tax treaty finalized. It's way overdue. It's a simple treaty to get done. I'm not a lawyer, so I wouldn't negotiate it, but to me, if every other Asian republic has, the Central Asian Republic has it, and Pakistan and India have it, Afghanistan should have had it by now, especially with the sacrifice that our countries made to try to develop the bilateral relationship together. The second piece of that is very important. Now that you have WTO accession, we need to see a bilateral investment and trade agreement. They can be in one document. It's not a difficult lift. We need to get the U.S. government's attention and support for that. I think we had a meeting recently with the Deputy Minister of Trade and Industry, and he's very committed to trying to get that done as soon as possible. With that foundation, you're going to find a lot more interest from U.S. firms because now they know they have the tax protections, the bilateral treaty protections for investments and trade opportunities that they want to take, but they can't take yet in Afghanistan. We also have three main recommendations. I'll be very brief. We want to create regional guaranteed frameworks for more small and medium business investment. There's a way to do that, and we can talk about that separately. Secondly, we want to see basically a new regional development bank. The Inter-American Development Bank covers Latin America, and it's been a very successful model for the global financial community. Other regional banks, like the European Bank for Reconstruction and Development, very successful model. It is time for Central Asia to have its own regional development bank funded by the multilateral development and bilateral donor community, but run and operated by Afghan, Pakistan, and other regional trade partners so they can better identify what works best, what infrastructure we should be investing on that's going to help the integration of the economies in the region. That's where the future needs to be going. We'd like to see more harmonization of financial sector policies and institutions. And lastly, AACC would like to encourage the development of a new regional equity fund. This is something that USAID has been trying to get going. They had a big 2014 trade financing report that they published, which said that there are models already existing for this, and it's time for Afghanistan to have it, which will give you as private sector leaders another avenue outside of the government financing structure to be able to access equity financing to help you do projects and other infrastructure investments that maybe you want to undertake in your community. So now let me hand it off to Jeff Constantz from OPIC, and we'll start with our presentations. Thank you.
I'm glad to be here. Jeffrey mentioned John Aldonis, who is the head of our origination effort in Afghanistan. And John has dedicated himself to developing an awful lot of business in Afghanistan, and it's been somewhat of a family affair. One of his sons actually served in the Marines in Helmand, so Afghanistan is near and dear to his heart, and we've set ourselves up to do the best we can in assisting with the financing. I'm a managing director in our asset management group, so after John originates the loans, he hands them off to our department for managing and ultimately collection. So I like to say he's got the happy part of the deal. He's handing out the money, and I've got a little bit less happy aspect of it in trying to get that money back. So the next slide. This, for those who are not familiar with OPIC, not to be confused with OPEC, we're basically the U.S. government's bank, development bank, and insurance operation. And this gives you an idea of our spread of activity. We're active in 103 countries currently. and we're managing somewhere around $19 billion worth of portfolio. In Afghanistan, we understand the domestic banking scene is marked by a very low loan-to-deposit ratio. The last statistic I read was something in the 20% range. If you compare that to the U.S. market, where they're anywhere between 80 to 100% loan-to-deposit, there's not as much activity in the domestic banking market as you would hope. And OPIC feels like it is positioned to kind of bring that average up and fill the void. The next slide. So this gives you a little bit of a breakdown percentage of our portfolio. We're mostly dedicated to lending. We support investment funds with a layer of debt in mostly equity funds, and we provide political risk insurance. And down the left-hand side, you'll see some of the products that we support. The next slide. If history is a good prediction of the future, here's a little snapshot of our activity in Afghanistan since 2003. We've supported close to $300 million worth of projects, financing and insurance, spread across 40 private sector investments. The types of loans we'll do, it almost seems like there's a wide variety, and nothing's necessarily off the table. We've done housing, we've done hotels, milk, juice, water production, food storage, cold storage. We've bought some capital equipment to put white marble on the export map for Afghanistan. And I think one of the more important financings we've done is in favor of an outfit called Afghan Growth Finance. If we can go to the next slide. Oh, well, we're going to take a little tour here of some of the projects. This is our hotel in Masood Circle. Next slide. This is a very successful apartment complex that we got involved with, and it was sold out before it was completed. Next slide. Here we're supporting the famous Afghan rug industry and supporting working capital for an individual who's exporting those rugs. Next slide. And there's a very big piece of equipment, brand spanking new, that we financed to help this outfit go deeper into some white marble that they were quarrying. Next slide. So with that as the history, predicting the future, we're still very much open and engaged in Afghanistan, and as the military and the contract economy recedes, kind of feel like OPIC has an opportunity here to support the private sector, which should pick up the slack. John Aldonis is looking at a pipeline of around 30 million, looking at deals in health and telephony, media, construction material, and Kashmir. In all of these projects, we work closely with Afghan Growth Finance, who I mentioned, and the best way to access OPIC financing may very well be through Afghan Growth Finance. The next slide. So those of you who may be interested in accessing OPIC financing, this would be a good screen to capture because it has Mustafa Kazem, the managing officer at Afghan Growth Finance, contact information. It's got a picture of his smiling staff of professional bankers. We've committed $80 million to Afghan Growth Finance for their on-lending program. So they're local, they're quite good at what they do, and I highly recommend approaching them. Next slide. So again, this indicates how they go about their business and what they've been able to accomplish. They'll provide really some capacity building along with the finance, and work with companies to provide the accounting that obviously feeds their needs, but also enhances the controls in the company. Next slide. And again, Afghan Growth Finance, the types of loans that they're able to commit to, the length, the dollar amounts, and exactly how they approach it. So the last slide gives you the contact information for John Aldonis, who we've mentioned. And should you feel like your deal is maybe too large for Afghan Growth Finance to handle, feel free to contact OPIC directly here in Washington. And a good place to start would be an email to John Aldonis. Thank you very much.
Thanks, Jeffrey.
So anyways, it's a honor to be here. I'd like to thank AACC for hosting this 11th annual event. It's an honor to be a part of such a distinguished panel. Clements Worldwide has found itself in a unique position to utilize our reputation and our business relationships to influence the insurance markets. Currently, we're providing insurance solutions for individuals and corporations in over 170 countries. Next slide. Clements has 4 core functions. It allows us to offer the proper insurance coverage for our clients. The core functions really start with risk assessment, right? This is the who, the what, the where, the when, the how. You think these questions are simple, but there's detail that we need to get from the client, right? So a simple question with could be like there's lots of parties involved in a contract, right? You could be a subcontractor of a prime. That's something that we need to know. It's important. You could be a general contractor that's tasked to manage a construction project, say in New Kabul City, and the coordination of all the subcontractors on the project, the supply management and all that stuff. I mean, in this scenario, the who could be multiple companies, multiple private investors and bankers and underwriters that all have a vested interest in the project. So making sure your broker knows all the parties involved, are crucial for placement of your coverage. Then you have the what. You'd think the question, what are you doing, is pretty simple, but some words that clients like to use can paint a vague picture, right? Unclear. Like, for instance, you could say, oh, we're in consulting, or we're engineers, but I have no idea what consulting is. I mean, or engineering. I mean, you could be consulting on transit routes, or you could be a subcontractor that's designing a bridge. Could be consulting in the insurance environment or the security environment, et cetera, right? So when you're describing your services to your insurance broker, you have to provide details of what your employees are doing, basically on a day-to-day basis. Paint a clear picture. Because if you don't, you're running the risk of either not getting the insurance or getting higher rates. And if you don't get the insurance, then you don't win the award, right? So then you have the when and the where and the how. These questions obviously just can go on and on. Where are you operating? When does the project begin? When is the project scheduled to end? When do you train your employees? How often do you train your employees? How does the time element affect you and your contract? Are there penalties? How are you protecting your employees? How are your employees moving around the country? How are you protecting your work site? How are you protecting your vehicles, your assets, your equipment that you're using for your projects? Where are they stored? These are all the questions that your insurance broker, your partner need to know. Because like I said, you can lose the award or you can limit your ability to qualify for financing of a project, or you're going to get higher rates, which causes your profit margin to shrink, right? Once Clements has a better understanding of your risk, then we can move to the 3 other pillars that we use to provide our insurance solutions. You know, market intelligence, solutions design. These are simply defined as insurance markets or insurance policies, insurance products, underwriters. Next slide. Clements has been around since 1947, providing international insurance. Our clients range from international government contractors to non-government organizations, to embassies, to international schools, and so on and so forth. You know, we are a multi-year best practice award recipient, you know, and where companies really find us helpful is our ability to place the hard risk. You know, our clients are usually operating in the emerging markets all over the world. You know, let's just say the challenges for companies operating in DC are not the same as the challenges for operating in Afghanistan, right? You know, the challenges our clients were facing in Afghanistan in 2002 were what made us approach the markets of Lloyd's of London, which made us create new solutions for the NGO and the multinational organizations. You know, we created the policies to provide for political violence and political risk. We created coverages for political evacuations and medical evacuations. Now we have 9 different coverage lines that we underwrite and manage in-house, you know, under our cover holder agreement with Lloyd's of London. There's not many brokers that can say that. We were also nominated in 2011 by the MENA Insurance Awards for the most innovative insurance product, commercial lines and personal lines broker of the year. You know, and as I stated earlier, we're not operating, but we're providing insurance in over 170 countries. Next slide. You know, the spectrum of our clients pretty much look like this. There's 2/3 of our clients are corporations, 1/3 are personal. I work on the commercial side. So you can see that we work with the NGOs, private government contractors, aid and relief, international schools, and so on. You know, but our affinity partners, and these are big partners. I mean, United Nations Federal Credit Union, we're providing insurance for their members and employees all over the world. UNHCR, we're managing their fleet of over 6,000 vehicles in multiple countries. And our strategic insurance partners are really what allow us to accomplish this. You know, we work with all the major insurance players in the world. And where these major insurance players didn't provide the solutions, we then went to Lloyd's of London. And then Lloyd's of London obviously has an umbrella of syndicates similar to insurance companies that we worked with that backed us and backed our clients. Next slide. To get more specific on contracts in Afghanistan and how it relates to insurance, the first question you have to ask yourself is, is it a U.S. government contractor working on, or is it a private contract? Of course, there's going to be a difference in your contractual insurance requirements if you're bidding or if you've been awarded a U.S. government contract as opposed to a private contract. You can see here, your insurance requirements for a private contract can be much more than a U.S. government contract. However, that doesn't mean that the private contracts will require you to obtain these insurances. There may be others. There may be less. You may be operating on a handshake. Who knows, right? Well, what I can tell you is if you're entering into a multi-million-dollar contract, you can rest assured there's going to be banks and attorneys and underwriters that are all going to be involved in the process, making sure that you have the insurances that you need. Most of you know about the DBA insurance and how you're required to have this insurance in order to obtain a notice to proceed, right? When you're working on a U.S. government contract. You need to show that DBA insurance before you can work. You need to show it to your prime contractor. Now, what you may not be aware of, though, is you're also required to have general liability, right? And auto liability if you're operating on a U.S. government contract. Now, here's some of the issues with the private contracts is you have to think about the political environment in Afghanistan. If you were investing $1 million of your own money, you're going to want to make sure you have some contractual obligations, right? You're also going to want to make a profit. For Afghanistan to increase its private investment contracts, it's going to have to deal with the issues of political uncertainty, instability, and the rule of law, which sounds like they're in the process of doing. outside private investors are going to want to make sure their investment is first and foremost protected for political risk, which includes government confiscation, nationalization, expropriation, acts of war, terrorism, strikes, riots, civil commotion, etc. Which basically says if you're building a new city and the government wants to take it from you, or insurgents come and blow up what you've built, the private investor is going to want to make sure that they can recoup that loss. Otherwise, how are you going to get these private investors in the country? The risk is too high. So, I'm currently working with an Afghan-American company to start a major project in Afghanistan, but it was contingent on getting political risk insurance, which I was able to obtain in the open marketplace, and it's currently being reviewed by the banks and the investors and their attorneys, of course. So, what I'm saying is there's a marketplace. They're interested to provide the coverage. However, the companies have to make sure they've done their due diligence. You've got to make sure you're providing that clear picture. Done the who, the what, the where, the when, the hows. And once you've done this, then you can work with somebody who's reputable, who knows the marketplace, has the reputations like Clements, to help you get that taken care of. Thank you.
Okay, thank you very much. I wanted to ask one question if I could. So in the international assistance economy, a lot of the Afghan firms that are here were working for USG or other donor space or funding vehicles. But now that they're transitioning to a private sector-led growth economy, they have to start changing how they looked at insurance. So now, today OPIC talked to you about opening the Afghan Growth Finance Bank opportunity for financing. So if they're looking to start export or they want to finance and do project finance, they can still talk to you, even though it's not a government-funded project that they're working on, because those banks may be requiring your insurance
Correct.
for them to finalize their financing deal, right?
Correct, yeah.
Okay, great. All right, so we're on to our next speaker. Thank you very much. That was excellent.
Okay, good morning, everybody. Actually, this is the third time of speaking in front of you. Thank you very much for American Chamber of Commerce and Jeffrey. And JICA has been long committed to the development of the Afghanistan, and together, with JICA and Japanese government. And I'd like to explain this time what we are doing recently. And actually, I need to speak a little bit about the change of the direction of our work. Next slide, please. First, as to the policies or strategies of the Japanese government or JICA, no change. Support Afghanistan's self-reliance and prevent the country from slipping back into a hotbed of terrorism. This is not changing. We have been still committing toward this objective. And as to the commitment at the Tokyo conference in July 2012 by Japanese government is on track. In the amount of maximum of $3 billion in 5 years, I understand that almost 80% is finished and still ongoing. We don't change this objective. Next slide, please. And just to look back the 3 pillars of assistance, this is also continuing. The first one is to support enhancing the government of Afghanistan's capabilities to maintain security. Under this pillar, JICA is providing some assistance towards the police, development of the police. And the second one is assistance for the reintegration of ex-combatants. And the third one is assistance for Afghanistan's sustainable and self-reliance development. And this pillar is what JICA has been working on most. And for example, transportation sector, the building of the Kabul airport or roads, agriculture or rural development, education, health, these are the sectors we have been long doing. And cumulative total of the assistance, of technical assistance only, is about $430 million. And we have already dispatched more than 1,700 experts to Afghanistan. Now, next slide, please. Now the challenges, and this makes our direction a little bit changing. It is about the security. And last year, when I came here, also I explained how important for us is the security. We are sending experts, as I mentioned, and our characteristics of our assistance is not just providing money or the equipment, but we are sending experts and working together with Afghanistan people so that we can make a certain result. And this system is a little bit in a problem right now. Because of this security situation, it is becoming a little bit difficult for us to send experts to Afghanistan. And also, recently, other government agencies, we are asked to promote more private investment, private activity towards developing countries. Afghanistan is also, of course, one of them. But when it comes to the Japanese companies, they are very much cautious about the security situation. And at this moment, it is a little bit unlikely to promote those kind of activities from Japan. So, in order to keep our activity, we need to think to change a little bit about our modality. And recently, the number of projects done outside of Afghanistan, inviting Afghanistan counterparts, are increasing. Next slide, please. So they are reflecting this kind of situation. These are some of the recent activities. The first one is about the training of female police in Turkey. Promoting role of the women is one of the main objectives of Japanese assistance recently. And reflecting this policy, we are doing this police training in Turkey. Actually, police training itself has been done long years, and we more than 2,000 police officers are participating in this training. And this year, female police was included. And for this training, actually, JICA is sending like a judo instructor so that people in Afghanistan can play judo. Then, next one is training of disaster prevention in Pakistan. This is about the after the disaster mitigation, Japan is really a disastrous country. I mean, we have a lot of typhoon, sometimes earthquake, so we have a lot of experience of disaster reduction or counter reaction to those disasters. And we have been receiving training from Afghanistan to Japan, and also from Pakistan. And at that time, some trainee of Afghanistan said that hearing about the experience of Pakistan, it might be very suitable to do it in Afghanistan. So we decided to do a training course using a Japanese trainer in Pakistan. The third one is about training on agriculture in Iran. And this is actually our training for the rice crops. Mainly two objectives. One is for research and development, and the second one is how to disseminate the new technology to our farmers. And this is done in Iran. The fourth one is training on hydrometeorological information in Japan and India. This is to utilize the information from satellite, how to utilize this kind of information towards prediction of the rain or flood, or utilizing those kind of waters. This is a training mainly done in Japan, but also in India. And lastly, this is not a kind of project, but this is a new activity with the US government or USAID. We signed a memorandum of cooperation on Promote project. This is actually a Promote Gender Equality done by USAID. And we also have several projects to promote females entrepreneurship in Afghanistan. And so we are now thinking of what kind of collaboration we can do together in Afghanistan. Today I see several female entrepreneurs here, so I think our project may contribute to their activity. Well, this is almost all, and last week, actually, in preparation of this presentation, I contacted our chief rep in Kabul, and actually I asked him to come, but he said that they are now in preparation of the new program. I don't know the program itself, but maybe sooner or later it will be announced. And he also said that it is a time to be patient for us and to think something new. And so I hope this time of patience will end soon. Thank you very much.
Good afternoon, gentlemen. Thanks for having me here. Afghan Rural Finance Company, usually when everybody hears the name rural, they would say, okay, rural areas, maybe it's a microfinance or something, but no, Afghanistan Rural Finance Company is your friend. We contribute to invest or give you loans, increase your businesses, develop that, and that impacts the economic growth of Afghanistan. Next slide, please. ARFC is a non-bank financial institution, which means we are not regulated by the central bank. It's Afghan managed. It has presence in Afghanistan. We have offices in Kabul, Mazar-e-Sharif, and Herat, and also presence in some other provinces, including Nangarhar and neighboring provinces, where SME clients exist or the businesses exist, and we support them. Next slide, please. Those supports are through Islamic loans. We are the only Sharia-based financing company. We provide you Islamic lending, and that can be given especially to agricultural sort of activities, or I would call it agribusiness, and trade finance, which includes export and import. We also support big-time manufacturing in the country, and some services activities, which directly involves job creation and economic development. The other biggest part which ARFC is playing in is the women empowerment. So we have specific tribute to women activities. We provide them different types of loans with attractive facilities, including designing and their financial softwares, I would call it, and providing financial literacy to such businesses. Next slide, please. Our loan products are basically the two main types, the Murabaha and Musharaka Mutanaqisa. Musharaka is the partnership type of investment, and Murabaha is a simple buy and sell agreement. But what comes in is the loan size from $50,000 up to $500,000. That we consider SME in Afghanistan, and since the inception till date, we have disbursed over $45 million, and that supported numerous numbers of SMEs, over 287. We are not that big as OPIC, but we still want to try to take an active role in development of Afghanistan. We also provide Murabaha loans for trade and services, so on the construction side, on the logistics side, those loans can be used, and they have a sort of, I would call it, very positive impact on all of those activities. And the Musharaka Mutanaqisa product is specified for trade, which is export finance. And that's one of the fields we are pretty active in. And if you want to do export of the agricultural product outside, we are here to support you. Next slide, please. On the women's side, as I mentioned, for women, there are a different type of loans. Definitely the sizes are different and the duration is different. While for the other businesses, it is a little bit complicated. Don't be scared. But the women's are has not been so active in the businesses, so that's why we want to promote that part, which increase the women contribution in economic development of Afghanistan. Next slide, please. Here's a fantasy picture of export finance, which that's a value chain, and that's where the rural finance comes in. It's a linkage between the farmer of producing all their harvest. It comes into for the processing, it's cleaned up, packaged, and then exported. And that's one of the successful stories of the export finance, which has been doing now since 5 years, and they have been our clients for many years too.
Where's it exported to?
They export usually to Emirates, India, as well as Qatar and the neighboring one.
Okay.
Yeah. Next slide, please. We also finance a brick production, I would say, well, yeah, juice factory, which also is a value chain. They get fresh fruits, and they can produce concentrate and Tetra Pak line. So they do also exports of the concentrate to many countries, and the Tetra Pak line, the juices you may have seen, it's all over Afghanistan Airlines and now in Indian Airlines. So that's one of the another successful stories, that Afghanistan products can also be seen as a qualitative product for overseas usage. Next slide, please. On the women's side, as we say, the woman-owned factory in Jalalabad, which produces snacks, and that has been marketed all over Kabul and Nangarhar province, as well as they opened their outlets in East and West. They have been supported by us since 2007. The business was so small when they started it with a $20,000 their own share with a $70,000 of ARFC loan, and now this company has a loan of over $500,000 from us. Next slide, please. ARFC is mainly involved in value chains for trade finance. So anyone in the chain can approach us and get a financial facility to support their business. That chain starts from a small farmer with a simple money which comes in from the supplier or end user to Afghanistan, where we can also do pre-financing purchases for them. What makes you required to apply for a loan to ARFC or use our Islamic facilities? You should have a registered business in Afghanistan, a license. We will help you out if you don't have any business plan, but usually, of course, you do. So mainly business plans are required, which gives us an insight that what is the plan for the future. As I mentioned in the beginning, we are not a bank, we are a non-financial institution. Our aim is to the economic growth, not making profit. We require audited financial statements for any company who requires loans over $200,000. We can finance your contracts, and we can also take the contracts as a collateral. We can accept promissory notes, LCs, payment guarantees as a collateral. Beside that, property pledge is one of the important aspects of lending in Afghanistan. It has been, we all know, for many years, but recently, with the, as colleagues mentioned here, with the drop down in the Afghanistan economy going out of the, or I would say leaving of the troops from Afghanistan, while there is a drainage of cash, so to minimize the risk, that's one of the highest requirements. And you can also assign your movable collaterals to us on assignment of receivables. Next slide, please. Why to get a loan from ARFC? We offer attractive pricing. It's a very competitive pricing compared to the loan you would get from a bank. We don't charge you any prepayment penalties. Normally banks do. We will have very transparent relations with the customers, which means you can get access to your financial statements as well as your credit rating, which has been launched by the central bank through ARFC as well. We can bridge your financing for procurement and services. And again, for the women only, we develop their accounting systems and provide them technical assistance out of our own funds. Next slide, please. For more information, you can go to our website, and you can also contact us through the email. It's written out there. If you want to meet me in person, I will be here for some time, so we can exchange cards, and you're most welcome to join the economic growth of the country. Thank you very much.